Good afternoon. My name is Asaf Ze'evi. I'm the chief scientist at Fintica, also a professor at Columbia University, and I'll take you through a brief tour of the company and some of its products, mission, etc. over the next few minutes. So at Fintica, we are a startup company which is focusing on deep tech development in the financial industry. We're providing solutions in that industry which essentially make AI tools accessible. These AI tools are also targeted at a broad set of investors, a broad set of asset classes, with the aim of essentially bringing this technology to within the reach of the broader market. The company has assembled a really impressive team of domain experts in both AI and financial markets that hail from leading schools in the US and Europe. It's also, as a global company, situated in a variety of the main financial centers in the world, with headquarters in Tel Aviv, but with a strong presence also in Hong Kong, New York, Abu Dhabi, Zurich, and in Paris. The mission, again, of the company is to bring, as I said, sophisticated AI technology to within the broader reach of the market, and essentially provide a host of solutions that I'll articulate over the next couple of slides. The core technology is predicated on what's known as unsupervised AI, which is very appropriate for the types of challenges that exists in financial markets that range from either data overload to situations where data is either scarce or missing. We've developed a strong set of tools which are also, several of which are also patented, that provide a very broad set of solutions leveraging this AI in those markets. The solutions that I was referring to range across various asset classes. It's important to emphasize that technology is effectively asset class agnostic. I'll take you through some of these tools in a short demo that I'll show shortly, but these tools range from very global macro signals in equity markets through more fine-grain daily trading signals all the way down to market microstructure, and this is all in a traditional equity space. And at the same time, we also have a footprint in fixed income, as well as in emerging digital applications, which include cryptocurrencies and smart NFT solutions. From here on, what I'd like to do is take you through a quick demo of what we actually are doing with these tools. And for that purpose, I'll flip to our demo screen. Here you see essentially some of the key technologies that are being offered now and being co-developed together with major design partners that range from regulators to large Fortune 500 companies. I'll start with this one called Spectrum MRI. This is essentially a technology that allows to examine a market, in this case it's a US equity market, understand underlying characteristics that are classified as regimes. You can see the list of regimes here that range from very strong up markets to strong down market scenarios. And what you see basically in this curve is the return on an investment following a buy and hold, which is the gray curve, and a strategy that's developed based on this regime classification. In green, you can see the tangible gains that are obtained using this insight into the underlying regimes. These color-coded bars that you see here correspond to this index, and again, what it does is label the various regimes in the market at a macro level. You can also get a range of KPIs. This is at the top here. You can see various things ranging from Sharpe ratios to various risk metrics like drawdown, value at risk, etc., and turnovers related to the application of the strategy. What underlies this to some extent is an understanding of daily movements in the market. So we're shifting from a high-level macro view to more of a granular daily view. You see here date by date, day by day, signals that are basically classified for simplicity as up market or down market. You can see around the line that I'm hovering is the major market downturn at the start of COVID in March 2020, and you can see the strong down signals that the technology is indicating, which essentially allows our strategy to step out of the market. That's that blue line that you see here, as opposed to the indexes that basically took a major downturn during that time. So this is a granular day-by-day view, giving essential heads-up forecasting on what the market is going to be doing. If you drill down to even a lower level, you can see here a technology that essentially is looking at the behavior of market microstructure. And here we're going to be showing a graph that indicates how this microstructure data can be classified into various trades that are appearing here in blue and red. These are various positions, again, taking at the microstructure level. This is more relevant to high frequency, but gives a complete understanding, together with the daily signals and the macro regimes, of how the markets operate from the most granular level to the most top macro level. I mentioned applications to other asset classes, for example, in commodities and in fixed income. Here you see technology called Bluestream, which is a price completion technology. In this original graph here, which is showing right now fixed income, you can see there are essential graphs that are indicating two things. One, in blue, is the original data, where a lot of the data is missing. This is typical of U.S. muni market bonds or Islamic bonds. And what you see in red is essentially an interpolation or completion of that data using our proprietary technology. This can again be applied both to fixed income or to commodities, for example. And the technology is very essential in opening up the market and providing liquidity information for market participants. Finally, I'd like to show you a little bit of the footprint that we have in the digital space, where we're going to look at two cryptocurrencies, Bitcoin and Ethereum. You see their evolution tick by tick, essentially, and you can look at one or superimpose the other as well, and look at the behavior. This is due to the large volatility in these markets. You see there's a lot of fluctuations here. This is the recent major downturn in the crypto market is reflected fully in this volatility index, and this index essentially opens up the possibility to both invest in these currencies in a more effective way, but also to produce and generate new derivatives in this space that don't currently exist, because there aren't such technologies yet that are able to provide volatility information. So I hope this this demo gives a little bit of a sense of how the products and solutions that we have operate and how they reflect in terms of the markets. I'm happy to take further questions offline, and thank you for your attention.